A1 Truth Advisors, Inc. holds a 90% interest in Lyers Company. During 2017, Lyers sold inventory costing $95,900 to A1 for $137,000. Of this inventory, $46,000 worth was not sold to outsiders until 2018. During 2018, Lyers sold inventory costing $128,400 to A1 for $214,000. A total of $55,600 of this inventory was not sold to outsiders until 2019. Now, going back to 2018, A1 reported separate net income of $208,000, while Lyers' net income was $117,000 after excess amortizations. What is the non-controlling interest in the 2018 income of the subsidiary? All right. Now, to determine that, we need to do a couple calculations, and I'll show those on the screen. First, we have to come up with the intra-entity gross profit. Okay? The ending inventory as of 12/31/17 related to the sale of Lyers to A1 was $46,000. And we have to calculate the gross profit rate. And we calculate that by taking 41,100 divided by 137,000. Now, the 41,100 is simply the 137,000 selling price less the cost of 95,900. Okay? So that's how we compute the gross profit rate. Then if we multiply the gross profit rate times the ending inventory, we can calculate the intra-entity gross profit and ending inventory at the end of 2017. All right, now we have to do the same calculation for 2018. And what do we get here? We have 55,600 that they gave us. This time the gross profit rate is 85.6 divided by 214. Now, let's come up with those numbers. There's the 214,000, and there's the cost of 128.4. So if we subtract 128,400 from the selling price of 214,000, that's the gross profit amount. Take the gross profit amount divided by the selling price, we come up with the gross profit rate. Okay, now that we have the ending inventory times the gross profit rate, we can calculate the intra-entity gross profit and ending inventory at the end of 2018. Now, once we have that information, we can answer the question, what's the non-controlling interest? Let me remove this and we'll see this here. Slide back up so we can see the entire question. Okay, so the reported net income was $117,000. Then we have to add in the gross profit that was deferred in 2017, because at this point it becomes real once we sell it to a third party. And then we have to defer the gross profit on the sales made during the current year, because essentially all we're really doing is transferring inventory from one entity to the other in a consolidated enterprise. So there really is no sale to an outside party. So we need to back that out. That gives us an adjusted net income in the subsidiary of $108,560. And then the last part is we have to identify how much of that relates to the non-controlling interest. Okay, and since right up here it says A1 Truth Advisors holds a 90% interest in Lyers, then only 10% of that adjusted net income is associated with the non-controlling interest.